Hello, everyone, and welcome to ePlanet Academy's highly anticipated webinar. I'm thrilled to introduce our distinguished guest, Dr. Brett Steenbarger, a renowned psychologist, author, and performance coach who has redefined the role of psychology in trading. Dr. Steenbarger is the author of many landmark books, including Trading Psychology 2.0 and The Daily Trading Coach, which are must-reads for anyone looking to enhance their trading mindset and performance. His work focuses on helping traders master their emotions, build discipline, and achieve consistency in their approach. Beyond his books, Dr. Steenbarger shares practical insights through his blogs, articles, and his recent exploration of spirituality in trading offers a unique perspective on aligning values with decision-making for lasting success. You'll find links to his latest projects, blogs, and Farsi translation of his works in the video description, so be sure to check those out. I'm Sagar Hossein-Poor, and it's an honor to have Dr. Steenbarger here today to share his expertise. Without further ado, let's begin this exciting conversation. Hello, Dr. Steenbarger. It's an absolute honor to have you with us today. Thank you for taking the time to join us and share your valuable insights with us. I know it's the holidays. You must be busy with the family. How are you doing today?
Doing very well. Thank you for having me.
All right. Thank you so much. We have talked about different aspects of trading psychology before, and I had the honor to talk to you one-on-one. And as you know, today we are going to mainly focus on some issues that Persian-speaking traders usually face in our trading community between our clients. Now, something that somehow can be very common among all international traders is the emotion of fear and greed. And we all know what fear is. We all know what greed is. We know the concepts, the do's and the don'ts. But sometimes when the market participants and the traders are taking action, getting into the trade, they don't know it's the fear or the greed that is driving their decisions, how they're clicking and taking, for example, a trade. Now, what are some practical techniques that you could tell us and recommend to us that we could use to manage, first recognize that it's fear and greed, and then manage these emotions in volatile situations of the market?
Yeah, very good question. And you're absolutely right. Traders I have worked with in different parts of the world have experienced the fear and have experienced the greed. I'm going to offer a different approach or a different view of the emotions of trading. And I'll do that by way of an analogy. I teach at a medical school in addition to working with traders. And so I work with medical students who develop into becoming physicians. And some of them develop into becoming surgeons. They do surgery on people, and sometimes very complicated surgery, sometimes surgery in the emergency room. Now, the risk reward of doing emergency surgery is greater than placing any single trade, right? How many medical students, residents, physicians go on tilt when they do surgery? How many deal with the emotions of fear and greed and end up ruining their surgeries because of emotions? The answer is none.
Yeah, hopefully zero.
Hopefully, yes. But why is that? Now, this is very, very important for the webinar viewers to think about. When you learn a performance field the right way, you get rid of the emotions. Fear and greed only are part of trading when people have not learned trading the right way. Now, in medical school, so where I teach, the first 2 years, there's no seeing patients at all. They're just learning about anatomy and physiology. They're learning about the body, and they're studying medicine. The second 2 years, they observe people doing medical treatment. They shadow, they follow physicians and observe. And as they observe, they get to participate a little bit. They get to practice their skills, interview skills on each other, things like that. For surgery, they practice doing surgery on cadavers.
Yeah.
Yeah. And so they actually get practice. And then when they do surgery with actual patients, they're closely observed. They do it together with the physician. So what happens is, before they ever get to the point of doing their own surgeries, they've done 2 years of learning medicine, 2 years of watching people doing medicine and trying things out themselves. And only then do they try doing things themselves. But by the time they try things, they have supervision, people are watching them, and it's in a safe environment. And so they learn to be safe.
Mm.
And by the time they're ready to do their own procedures, they've done it and observed it so many times that there's not a lot of emotion. With traders, what happens is, and we've all been there, they want to make money.
Very fast.
Traders want to just get in and trade to make money. And so they don't go through the proper learning curve. They don't spend time studying markets. They don't spend time practice trading without any money on the line, just simulated trading. They don't learn from their experience. They don't get supervision, or they don't get teaching from a mentor like in medical school. So they don't get everything they would need in their experience to feel confident, to know what they're doing. Because if they did, they wouldn't have fear and greed. The professional traders I work with at investment banks, at hedge funds, they don't freak out. They don't have big emotions going up and down, because they have been part of a team. They've learned step by step. They've practiced trading, and that has allowed them to take the danger out of trading.
You're absolutely right. I think practice makes perfect. And as you practice, you will be more aware, and maybe the emotional resilience that's needed for trading will somehow become a habit, a part of you as a trader. Thank you so much for the explanation. I'm sure it will become very helpful for our audience and our viewers. Another question that I want to ask you is that another core issue that our traders usually face is that they have a win at all cost mindset, and they enter the financial markets without a structured plan. For those people, what habits, what type of practices would you recommend they would somehow employ in order to build and also stick to those structured plans?
Yes, it's a good question. So if a trader is developing and observing markets and observing different market conditions, then they can start to figure out patterns in the market. And these patterns will occur on different time frames, in different ways, but with enough observation, you can see patterns, and eventually you can see them in real time. So let's say that the market you're following has been in a narrow range and now breaks out of that range on increased volatility. That's a pattern. And we can test that pattern to see what happens afterward. and we can follow examples to see what happens afterward. And that tells us that this is an opportunity. But you have to see and experience many different examples before recognizing the opportunity. Once you recognize that opportunity, sometimes it's called a setup, then you can create rules for trading that pattern. For instance, if you've been trading in a narrow range and it breaks out to the upside, when do you enter the trade? How do you enter the trade? You create rules for doing that that then can guide your behavior going forward. Now, interestingly, I mentioned the example of the physicians. If something is going wrong with a patient, they have rules for how to deal with that. If they are treating a medical condition, they have rules for what kind of medicines are best. So it's the rules that guide them in their best practices. And traders, as they develop, want to observe enough patterns of opportunity so that they can create their own rules and follow those.
All right, that's great advice. So figuring out a pattern and creating personal rules will help us stick to our plans. That's great. Another issue, I think we've talked about it before, is false advertisement that is happening in Iran, targeted towards people who dream of dollar-based income. They are lured in with false hope, really. The market is always profitable. If you have dollar-based income, you can hedge your capital against inflation. So when they come to the market and they're faced with the harsh truth, they might lose motivation. For those people, what advice would you give them? How can we cultivate realistic expectations? And for those who have smaller capital, do you even recommend getting into the market? Those who just use their daily necessities, maybe even to be active in the market. Do you think that's even rational in these types of conditions or market conditions?
Yes, again, very, very good questions. Two answers. Think about any performance field, like athletics, or maybe the performing arts, like becoming a professional musician. To get to the point where you can make a living from your performance, always, always, always takes years of development. Always. A musician who's going to make their living by doing music practices and learns for years. An athlete who's going to make their living professionally, they're going to practice, they're going to learn, they're going to play for many years. So the idea is that if anyone pretends that the traders can make a lot of money all at once without practice, without years of preparation, then you know that it's a false promise. And anyone who promises that you can get rich or that you can do really well without that development is not anyone you should trust. That being said, it's important, especially when you first learn trading, to trade first in practice mode with no money at risk at all. Just learn the patterns of the markets. Take the performance pressure off. Once you can do well in practice trading, then you can start to put some money at risk. And it should always be money that you can afford to lose.
Yes.
I don't want to lose so much money in the market that it would affect my family, for instance. So again, it's tempting to want quick riches, get rich fast, but by learning the right way and preparing the right way and taking modest risk, you give yourself enough time to learn to do well, and then over time you can make money.
All right, that's great advice. I hope people are taking notes. Now, if it's all right, I will delve into another question of mine, which I'm sure is a big question for many traders. We talked about greed, we talked about fear, we talked about plans. Another thing is that we have to talk about overtrading and revenge trading, which is absolutely apparent in the minds and in the actions of our traders, especially in our Persian-speaking communities, because after a winning trade, they think they are overconfident, and they think that all other trades, that strategy will work and everything will be great, all the numbers green. Or when they lose money, in order to cover the capital that has been lost, they enter the market one after another, and all the numbers are red. So overtrading and also revenge trading. How can we somehow create a method to break this cycle? How can we understand or recognize that this is overtrading, this is revenge trading, and stop ourselves from taking action?
Yes, and I do not think that this is unique to Persian-speaking traders. I think beginning traders often experience the overtrading and so forth. Again, when there is overtrading, when there's revenge trading, it's because trading has not been learned the right way. These are not necessarily part of how traders can develop if they develop the right way. So again, back to my example of the medical students learning surgery, do they overcut? Do they do too much surgery? Do they do revenge? If one patient doesn't go well, do they do revenge surgery? I mean, it's crazy. It never happens, ever. Well, why not? The risk reward is there because they learn the right way. And so when you practice trade and when you trade first without money at risk, you learn positive habits. You learn to do the right things. And if you find that you're getting emotionally caught up in the trading, you learn self-awareness. You learn to recognize, well, wait a minute, I'm getting worked up, and you teach yourself, you train yourself to step back from the screen and, a meditation exercise, do some deep breathing, calm yourself so that you can go back to the market with a clear mind. That can be very, very helpful. But again, if you learn the right way, then you build positive habit patterns, and these revenge and overtrading kinds of things don't occur.
All right, that's great advice. I hadn't thought of that in the way that you described it. It's a great analogy. I think it helps us understand the core problem when we are emotionally trading and every action that we take is emotionally charged. Now, I have always had this big curiosity about being an active market participant. Now, a lot of our resources, a lot of the books, a lot of the videos, educational material usually is cultivated towards investors, like people who have a lot of money, a lot of capital. It doesn't matter if it's about the fundamentals or the technicals or even the trading psychology aspect. Now, when we are looking at our market participants in Iran especially, most of them are only traders. They trade in Forex market or in the commodities market. Now, my question has always been this. Are there any differences when we are talking about traders and investors, their psychological, the emotions that they go through, and what tactics should they take? What actions should they take if they are traders and they're feeling some type of way, some type of emotions, or if they're investors? Well, how can we distinguish their psychological maybe strategies?
Yes, the psychology of trading versus investing is not really about, excuse me, emotions. It's about, excuse me, it's about cognitive processing, how we think, how we develop ideas. There's an excellent book called Thinking Fast and Slow. And the idea, Daniel Kahneman is the author, the idea of the book is that really we have two different parts of the brain. One part is a fast thinking, pattern recognizing part of the brain, and one is a slower, deeper thinking part of the brain that reasons and thinks things through in depth. Traders use the fast thinking part of the brain the most, and investors are doing slower, deeper thinking. And the important thing is for people to figure out where their strengths lie. What are they good at? Are they good at the fast pattern recognition, or are they good at the slower, deeper reasoning? So, for example, when I first started working and when I first started trading in Chicago, the average holding time of a position was 6 minutes.
Wow.
Yeah, that's what I said. So, how do they make decisions? So quickly, but they were looking at different information. They were not looking, for instance, at charts primarily. And they learned to process information very, 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 very quickly. And they were good at that. Some people are not good at that. Some people are the slower thinkers, and they can see patterns over days and weeks and months, and they become investors. So the question is, what are you good at? What comes naturally to you? What makes sense to you? Because if you're doing the right kind of decision making that fits with your strengths, then you won't get frustrated and you won't have those negative emotions.
All right. Great. Thank you so much. I really appreciate how you clearly explained that to us. Now, if it's all right with you, let's talk about your recent work on Radical Renewal, in which you have emphasized on spirituality in trading, which was very interesting for me. Could you share what inspired you to delve into this area and how it enhances a trader's psychological performance or resilience?
Yes. So Radical Renewal is an online book. It's in blog form. So each chapter is a blog post, and it deals with the spirituality of trading. So what that means is thinking about taking the ego out of trading. If you look at the world's great religious traditions, spiritual traditions, a common theme is stepping back from the ego and acting from the soul. And different religions think about that differently. Different spiritual traditions think of it differently. But there's this common idea that if we can take the ego out of our decision making, we can make wise decisions. And so I look at, in the Radical Renewal book, I look at different techniques for taking the ego out of trading. Meditation would be a well-known example of that, so that we no longer are focused on profit and loss. We're just connecting with the market and understanding what it's doing.
All right, that's great. Thank you so much. I also have another question that I think you have already mentioned some part of it, but I really would like to focus on this part. In our trading community, once people have made some profit or have been active for a few years, they have this know-it-all mindset. And they sometimes believe that they do not need to learn anything again. Like they think that they're set and they have learned everything, whether it's like the technical aspect of the market or the fundamentals. And sometimes this way of thinking makes them very unprepared about what's to come, especially when things happen on the macroeconomic scale, like wars or anything related to the geopolitics. In your mind, how can we somehow encourage traders to develop a mindset that needs continuous learning, continuous development? How can we advertise that?
Yes, it's so important. You're absolutely right. And it does tie in with what we were just discussing with the Radical Renewal book, because one of the things that we encounter in the world's great spiritual traditions is the importance of humility. And again, it's different in different traditions, but we learn that we're not the most important thing. There are things in life that are beyond us and that are more important. And we learn to focus on those things. And that humility allows us to always be learners. Markets are always changing, and so we're always learning. I work with people at hedge funds who are managing billions of dollars. They are always learning. They're very experienced, they're very successful, but markets are always doing new things. And so they realize that they have to manage their risk carefully, because things will change in ways that they don't always understand. A great example of that occurred in 2020 when there was the outbreak of the COVID virus, the coronavirus. Well, in March of 2020, all of a sudden, everyone realized that this viral outbreak would really hurt economies, and markets just plunged. Who could be prepared for that? That was a unique situation. If anyone went into the COVID situation thinking, I know it all, they really could have lost a lot of money. So the idea is that markets are always changing, we're always learning. That's part of the fun of being a trader or an investor, that we're always learning. It's never just a fixed thing. And that gives us perspective, that gives us humility, so that we can manage our risk in a careful way.
That's great. I appreciate it. I have another question. I think it's a very big issue, or a very big somehow question among our traders as well. Based on what you have mentioned, people should learn the market and should be as serious about learning to trade as a surgeon is when they're going through the field. Now, something that is very prominent in our Persian-speaking community is that mostly our traders choose trading as a not even a job, it's an entertainment, something they do part-time, not every day. Do you think that is somehow possible with the mindset that you have somehow described for us, that trading can only be can also be like a part-time job as well, or it should be full-time, full commitment if you want to be a successful trader?
Yes. I mean, I know a number of people who trade or invest part-time, and it can be done. The people who play music part-time or the people who play sports part-time, they can do it and they can enjoy it and they could get better at it. They'll never be on a professional team, but they can be successful in their own way doing it part-time. The important part is that even if they're doing it part-time, that they go through the right learning process and not just try to have fun and not be prepared, because then it won't be fun. Then they'll just lose their money. So even though they're not doing it full time, during the time they're doing it, they want to know what they're doing and learn and practice the right way. And that way it will be an enjoyable activity.
All right, that's great. I want to know what, in your future endeavors, what areas of trading psychology or performance are you planning to work on? Do you have any future projects that you would like to talk to us about?
Yes, I have a book that will be coming out this coming year in 2025 called Positive Trading Psychology. And it covers the area of psychology known as positive psychology, the psychology of health, the psychology of well-being. And it applies ideas of positive psychology to trading performance. So looking at the things in life that make us most healthy, most happy, most productive, how can we apply those things to trading? So a very simple example of that would be people I work with who are very successful at trading, and the way they become successful is by working in teams. And they learn from each other, with each other. They keep each other motivated. They teach each other. And they learn much better by being interactive. And as a result, they are helping each other and they all grow. And it becomes a positive learning environment. When people try to learn totally on their own with no team, no mentoring, it's much, much, much harder to succeed.
That's great. That's a great point, because there's this belief, I'm sure, between a lot of market participants that trading is somehow a job for the loners because you work on your own. Sometimes you don't have, you're your own boss. So having the mentality of it being a teamwork or learning from other people, having a mentor, I think will change the way that these traders see the market and somehow participate in it.
I would encourage them to question that. So of the traders I work with, I only work with professional traders, people who make their living from trading. I don't work with beginning traders. So of the people I work with who make their living from trading, none trade by themselves alone. So that's really important. They benefit from what other people see and what other people are doing. They teach each other, they learn from each other, and creating that kind of learning environment. It's almost like a school or a university being in a place where you can learn around people and with people, it helps your education.
All right, that's great. Now, are there any points or any areas that we haven't covered throughout this conversation that you would like to touch up on and tell us about?
Yes. The important thing in life is to be happy, fulfilled, to be doing meaningful things in your life, to make a positive difference. Trading might be your way of doing that or one way of doing that, but it's not for everyone. People have different strengths. They have different abilities. And the important thing is not trading or making money from trading. The important thing is to figure out what you do really well, what really makes a difference for you, a positive difference, and to pursue that. At one time in my life, I tried trading full time, and I made some money, but I didn't like it because I'm a psychologist. I like working with people. That's what's meaningful to me, is being a part of people's lives. And so I learned that even though I enjoy trading and can enjoy it part-time, I'm really meant to do something different with my life. I would encourage everyone watching this webinar to think about what in your life has been most successful, most meaningful. What does that say about me? And how can I build my life around what I'm good at and what I love doing?
That's such a great insight, because if there is no joy in what you do and it's always stressful, then why are you stuck in the situation to give yourself more stress every day? Thank you so much. Dr. Steenbarger, how can our audiences follow your work, and where can they see your insights or see your work?
Yeah, the best way is through the blog that I've written since 2006. Called Trader Feed, TraderFeed. And I cover many different topics in trading and trading psychology. And if you were to go on a search engine like Google, and you would put down a topic that you're interested in, like discipline, trading discipline, and then put Trader Feed, all the articles that I've written on that topic will pop up.
That's great.
Yeah. So that's the easiest way. And there are some books that I've written that have been translated into Farsi that also talk about developing as a trader and developing our psychology.
That's great. Thank you so much for sharing that with us. Thank you for being here today. It was such an honor talking to you. And thank you for taking the time. I wish you a great holiday and a great year ahead. And I hope that in the future we could work on different projects again with ePlanet Academy.
Thank you so much for having me. I really appreciate it.
Thank you. Have a great day today.
Okay, you too.
Bye-bye.
Bye-bye.